Hello everyone, welcome to another webinar session here with us in Hot Forex. So today we have, our topic is how to trade the news effectively in Forex. I know that sounds quite catchy, but I'm sure that everything that we will state today is there are things that you already heard. There are things that you should already know. So it's like a summary of what we are repeating in our webinars, in our videos, in our analysis, and some highlights what you should take care of, how you should trade, why you should apply the risk management in your daily trading routine, and etc. And of course our focus will be on news and how to trade them effectively. So before we start, as usual, I need to make sure that you can hear me, and I need to go through also the disclaimer warning. So until I have a feedback from you regarding the sound and the audio, I will quickly go through the disclaimer. So just consider we're only 6 over here. Okay, hopefully I will have a reply from you guys. So this material is provided as a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or solicitation for the purpose of buying or selling of any investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator for future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as Forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, taking into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure. So admin is out of the way. Guys, please let me know whether you can hear me. I didn't have any response, so just a quick yes and a no before we start the session. Okay, let me double check my own. Okay, thank you, Rico. Thank you. So as I was saying, in this webinar, we're gonna see together the news, economic news, any political events, any speeches, and how why they are so significant, which economic indicator or economic events have an impact or an effect in the market, and how you should actually treat those data releases and those events, how some possible ways to actually trade the news, where and when you could enter after or before data releasement, and what to avoid, something that you should take care of, because data releases, especially some significant events such as NFP that is on Friday, they are actually are high volatility events, so they can quickly stop you out if you have an open position in the market. So we're gonna see what you should avoid in your daily trading routine. So of course you are more than welcome to ask anything you want during the webinar. I will try to reply as soon as possible or in the end of the webinar. Okay, so let's start. First of all, I would like to start the session with the words from one of the founding fathers of the United States, Benjamin Franklin, who was, among other things, was also a scientist and investor as well, a businessman and a politician. So just try to remember this phrase. By failing to prepare, you are preparing to fail. So what that suggests to us, that before you risk your money, before you enter the market, before you invest, you should always prepare yourself to read what's going on, to try to learn and prepare as well as you can before risking your own money, right? So even if you're just 11 people here, the fact that you're here now attending this webinar actually tell to us that you want to learn and you have the correct attitude, the right attitude for succeeding in the trading market, in the Forex market. Okay, so that's why our very first slides are based on how you could prepare for trading. Like I have some slide from an old webinar that I did in the past. I think it was last year, by why you should have a trading journal. So some slides are taken from that webinar. It's a good way to have like a note journal. Okay, write down some important things. That's something that you should take care before you actually open positions. So this is just a way to help you guys prepare, because it's one of the most important things that a trader must actually do. So, okay. First of all, okay, before I go through the trading journal, the trading plan that you should have before trading, I will quickly go through. We're gonna quickly go through two types of trading strategy in the market. Okay, so oh, Calvin, thank you. Oh, good. So you are following your own daily routine before you enter the market every day. You're taking note of the news. What are you taking notes for? Sorry, guys. So, as I was saying, two types of trading strategies in markets is the price action strategy. Okay, so it's like and the mean reversion. So, okay, what is what? Price action, simply, if you just carefully check the two words, price action, is actually reflecting to the techniques that allow us as traders to read the market, to read the candles, to read the trend, and make subjective trading decisions based on the recent actual price movement of an asset. So so sorry, I go a bit. So so as I was saying, the price action strategy reflects to the technique that allow us to read the market and take our own decision, our own trading decisions based on the recent and actual price movement, rather than solely based our decision on some technical indicators. So what I'm trying to say over here is that we are basing our decision whether we will open a a long position, a short position, or remain out of the market solely by checking the candles, by checking the price movements, and not solely on a technical indicator such as RSI or MACD or fractals and etc. However, it is quite difficult to be however, it is difficult to be identified as the price movement, as a price movement needs to be fueled by something, right? Without, let's say, the economic releases, the economic data releases, without the news, either politics, either geopolitical stuff, or I don't know, from central banks, news from central banks. These are these are the ones. These events are the ones that could fuel the price movement, okay, and move the prices to a potential direction. So news and data releases are the ones that carry a serious weight on the price movements. Okay, so summary: price action is when we are based our orders purely on price movement observation. On the flip side, okay, mean reversion, okay, is again just take care of have a closer look on the two words: mean reversion, reversal. So mean reversion trading strategy is actually, it involves the strategy, the strategy that is based on it is based on the fact that the price will eventually revert back towards its mean or average value. So as I'm saying over here, mean reversion suggests that the asset price and historical returns eventually will revert to the long run mean or average level of the entire data set. So mean reversion trading actually tries to capitalize on extreme changes in the price of a particular security, assuming that it will revert to its previous state. So simply in simple terms, okay, let's say that you can actually, the idea of a mean reversion is that for every single asset there is an average price. If, let's say, we take into consideration the past 3 years, there is an average price based on this historical data for the last 3 years price movement. So mean reversion suggests that even if the asset is overbought or oversold, eventually it will return back to that average price. Okay. So let's say if we have, I don't know, USA 30 Dow Jones, and we have seen that yesterday, if I'm not wrong, it fell down by, was it 2%? Let me double check. So we had some losses yesterday on the Wall Street when Wall Street opened. Yes, if so, we have seen Dow dropping by 1.2%. So based on the mean reversion strategy, and in general, if we're checking the history of the equity markets and markets in general, we will you see that history repeat itself. So if, let's say, Dow drops by 1.2% this month, or even higher by 20% this month, this will probably fall less than next month. So actually, market tends to return back in the near-term future, or even in the long-term future, back to its mean or average value. So these are the two types of trading strategies that we have in the markets. So, however, okay, the challenge in trading is to find order in the sometimes seemingly random market. Okay, so you can see the market moving up, down, sideways. Sometimes you don't know what the reason why this you're seeing like moving the way that it's moving. You might if you check the chart, sometimes it looks like it's just it's just a random market and you don't have a clue of what's going on. This is because you haven't prepared yourself, you haven't studied, and you haven't tried to find out the reason behind these price movements. So, you know, in the markets, we have buyers and sellers whose actions have impact on the pricing of goods. However, how these buyers and sellers are actually fueled, why someone is buying this asset, why is someone selling this asset. So the fuel of a price movement, the fuel for someone to buy or sell an asset is mainly the overall picture of the economy and some economic news, political news, and etc., which could be a significant tool for traders, for financial investors um, study the market and actually uh, to even identify a trading opportunity. Okay, so trading news is not something easy. It's actually it requires a very careful monitor of the price action and knowing when the mean reverting market may switches into a trending one in order to estimate later on how long the trend may last. So it needs a lot. It needs to be, you need to be very careful on trading the news. It's not something it's not something easy. You need to combine fundamental analysis along with the technical analysis, um, and you need actually to try to understand what the news are telling you, what the numbers, the data releases are telling you, how these reflect, what that means to the economy of a country. Is that good? Is that bad? How it's likely um, to what's the most likely effect that could have on the country's currency. So you need to understand what the economic calendar, what all this that we have in the economic calendar are about, and what they actually mean, what consumer price index mean, why it is so significant, what gross domestic product is, and why it's so significant, why it affects positively or negative the dollar, let's say, if it's the gross domestic product for US. So you need to study. Trading news effectively is not easy. So the first thing that you have to do is plan. Trading the news requires a good, well-prepared plan. Okay, so with this way, um, okay, I will revert back to you later on, Calvin. We need to cover a lot of things. So, okay, so as I was saying, we need to have a plan. As I mentioned in the past, and I'm sure Stuart mentioned it as well, something that we are repeating again and again, by having a plan, it's like it's saving us, let's say, um, for taking human emotions a bit out of the way, a bit out of the of our trading. It is often claimed that market participants in financial market are so rational in their thinking and actions that human emotions do not play a part in the market moves. By experience, though, uh, we know that the price moves are often irrational and emotionally driven, unfortunately. So a plan could help us see the clear picture of the market and try to not to get greedy, not to get scared, and to actually um, bring those emotions in our trading to see the clear picture without emotion taking a role in our trading. So we all know from experience that whenever money is involved, there is no lack of human emotion. So plan will help us to eliminate that. Okay, so let's move on. What is a trading plan? So, but what do I mean by trading plan? What I simply mean by trading plan is that what we supposed to do, why, when, and how. So it covers, trading plans covers your personality, your personal expectation, risk management rules, and trading system. Developing a trading plan, okay, and sticking to it are the two main ingredients of trading discipline. Having a rock trading discipline is the most important characteristic for you to become the successful traders. Okay, so because we need to have a plan, we need to stick with it. We need to eliminate the human emotions, as I mentioned before, and this will help us to limit the trading mistakes that we might do if we don't get prepared ourselves prior entering the market. And we, of course, it's gonna help us minimize our potential losses. Okay, so is a trading plan is solely it could be solely created based on your own personality, your lifestyle, your interests, your personality. I mean, I have a question over here from Calvin asking about gold. So I understand that he likes trading metals. So you could, based on your trading plan, based on your preferences, if you like trading only commodities, then you can prepare a trading plan solely for metals, for commodities, okay, because you like trading only those assets. Okay, so this, if you someone that is well prepared about anything, I mean, even me, if I am very, very well prepared for my webinar, then I feel confidence presenting to you my webinar. So it's the same thing. If you get well prepared, then you have a confidence on your trade. You strongly believe that indeed, yes, I'm right. I did the correct thing, that I enter, let's say, for example, gold to the upside, to a long position. If you're well prepared, then that gives you confidence in your trading. Also, it keeps you focused on the process rather than the result. As we mentioned, it takes the emotions away, creates discipline, creates consistency, and simplifies your trading. Sorry, guys. Sorry. So, first of all, before you start your week, your day, and etc., you need to firstly decide with which markets are you interested in. Okay, are you interested in currencies, majors, US dollar currencies mainly, stocks, bonds, commodities, etc. So you need to figure out which markets you are mostly interested in. You cannot trade everything. We have, like, I don't know, more than 40, 50 assets in the platform right now. So you cannot watch everything. You need to stick to the ones that you're mostly interested in, or the ones that you understand and you would like to trade. So keep it simple. Keep just few charts on your screen. This will help you to monitor effectively those assets. The more they are, the more difficult will be for you to monitor everything. Okay, also find a suitable trading time frame. So these are the steps, guys, that you need to do in order to create your trading plan. So stick to a market, find the suitable trading time frame for you. I mean, are you available in the US Open, in the European session, in the Asia session? So if you're free, let's say between 11 to 12 every morning, then you should stick to that time frame that that is suitable for you, and you can actually focus on your trading, solely on your trading. So also, uh, like it's what I mentioned earlier. So you need to check the news, what's going on before the market open. So what's going on around the world, what economic data are we do today, Try to identify the market sentiment for the day. Are we in a risk on mode? Are we in a risk off mode? How the markets so what's the stronger currency so far today? Which one is the weakest so far today? What economic data are we due today, and are those economic data gonna affect the markets that I'm mostly interested in? Shall I trade ahead or after the data release, and etc. Connection is poor. Sorry, Felix. It seems it should be from your side, I'm afraid. If you face connection issues, you could you will get the recording once we end the session. Okay, so don't worry about it. So as I was saying, these are the questions that you need to do yourself before you open the market. And of course, you need to check the news before the market you open the market. What happened overnight? Okay, did we had any geopolitical news from US, from China, from Iran, from I don't know, whatever? You need to go through the there are a lot of news, there are a lot of published houses over there that they're posting news every 5 minutes, even less, announcing any development that we had, even the Brexit front, or I mean from all over the world. So it's good to go through the news websites every day before you enter the market, just to have in mind what happened overnight, and in general what's going on. Okay, that's the questions that you need to do prior starting your day. So, wait a minute. So the best way to start your day is actually by checking your economic calendar. Here is the economic calendar offered by Forex, of course, for free. We have all the economic data, political events, speeches from policymakers or leaders all over the world in our website in the economic calendar tab, so you can easily find the economic data of the day. So it's the first thing that you need to do. Okay. Sorry. So as I was saying, because why is it's so important to check your calendar every day? Because all these events are the ones that are, as I said before, are the ones that fueled the price movements in the markets. Okay, they are the ones that could provide volatility in the market. So the volatility in the market is often seen surrounding by news releasements or like from any press conferences, or when a policymaker or a leader is speaking. So all these events are actually adding volatilities in the market. So this is why it's very, very important that is the first thing that you should do. And don't forget that the economic calendar is planned for more than a month in advance, so you can actually check all the major economic events of the month per country and per level of importance. What we are saying is every day is that, and what we are posting in our daily market review is only the events that they are the highest in volatility, and they are the highest in importance. So this is the ones that you should actually focus on. The major events are the ones that you will see with this Red, so the highest, the major events in the economic calendar are the ones with this red color. So these are the ones higher in volatility. And the medium in volatility is are the events with this orange color. Okay. While we have also the gray and the yellow color, which are the less significant events. So you should really focus only on the ones with red and orange color. Okay, so let's move back over here. Because as I mentioned, these are the ones that could cause an average or even high volatility levels in the market. Okay, of course, it's not efficient, it's not efficient to trade all the news, as a lot of them are inconsequential or absorbed by volume. You need to stick on the major ones. So based on the largest economies in the world, like Europe, Eurozone, United States, Germany, which is the largest economy in Europe, UK, China, Japan, Australia, and New Zealand. These are the largest economies in globally. Okay, so you should focus on those ones. So one of the most important concepts in order to understand before trading, okay, before trading forex currency pairs, or in general before trading around exchange market news releases, is the market consensus. So actually you need to understand what this economic calendar is telling you, what is each one of those numbers stands for, why the consensus in the market is necessary, and etc. So simply put, okay, here we have in the first column, we have in the actually not the first, fourth column over here, we have the actual events, okay, per country and per currency. So the currencies that we are seeing over here are the ones that could have an impact based on the result of these economic releases. Here is the level of their importance, the volatility, the level that they could have. And the last three columns is the previous reading. Either that could be in a monthly basis, so we could see the reading, the outcome, the result of the last month, or if it's a quarterly release, it could be the result of the previous quarter, and etc. In the middle, we have the consensus. So what that is, this is the important, maybe the comparison between the actual result and the consensus is the most significant part of the economic calendar, and the one that could actually have a direct impact in the financial markets, because we have a comparison whether the actual reading came below or above the consensus, the market consensus. So market consensus is the average expectation of financial analysts and market participants for that particular economic report. So let's say, for example, the non-farm payrolls, okay? So this every first week of every first Friday of each month, we have the NFP releasement. So what is NFP releasement? Is actually the jobs. Let me give me a minute here. Okay, so actually is the number of the employed people during the previous month, excluding the farming industry. in the United States. So that's a very it's a leading indicator actually for is a leading economic indicator for the US economy, okay? Because it actually gives us how healthy or not the job market is in the United States. So the if the consensus, the market, the average consensus is that we're gonna see around 140,000 new jobs in the United States. So it is quite, you can hear a thing. Oh, Felix, I think it's your connection. Sorry, I don't have any other complaints, so I assume it's only you, I'm afraid. As I said, we have a recording. You will see, you will receive a recording by email by the end of our session. Okay, so don't worry about it. So, so let's move back to what we're saying. So some as we are saying, as I was saying, the market consensus is very significant because is what the markets are actually anticipate. So any missed or beat of that number could have a direct impact in the price movement of dollar in this situation. This is we're referring in NFP. Okay. So the outcome is quite significant because it is important to see whether it comes in line with the expectations or not. So also something that is also significant when you are trading Forex uh, is to look the difference between two currencies. Let's say euro dollar. When we have a euro dollar currency pair, then we have to check the difference in the economy between the euro, which is the eurozone, and the dollar, which reflects to the US economy. So which one of the two is a stronger currency based on the economic picture of the particular country? Which one is the weak currency and why? So news of any news, any economic news or events from the one currency and any weak news from the other currency would give us a direction for our pair, right? So let's say since we had some disappointing data last week and so far this week, if I'm not wrong, from the eurozone, we had some disappointing data from Germany, saying that confirming once again that we have a slowdown, contraction as well. So we have a weak euro overall. From the flip side, if on Friday again today we see strong ADP number from the United States and NFP beats expectations and release a number above 140,000, that should be good for the dollar. So from the one hand, we can say that euro is weak based on the ongoing mist of the economic data releases in the eurozone, suggesting that euro economic growth slowing down. From the other side, US economy is doing better than eurozone, so we have we can see the difference between the euro and the dollar, and this help us on identify a potential direction in the long term for the particular asset. So yeah, the most important, let's say, example of something like that is the NFP that we're gonna see on Friday. Is one of the most important news that affects the US dollar. So actually, it might be the first one in priority. Uh, um, in priority in comparison with the rest of the economic data and economic events. So that's why we're seeing a lot of very extreme volatility, high volatility during the releasement of NFP number. So okay, so as I was saying, the first thing that you have to do is check your calendar to see what are which events and which events you should focus on, what time are coming out, which dates are coming out, okay, in order to pretty much avoid having an open position during the time of releasement. But let's take it step by step, okay. So okay, let's go to the next chart where we have all the. So if you are let's say okay, some of you are intraday traders, some of you are like medium term traders, and etc. So if you are intraday traders, you might consider not trading, not only checking the major events like the ones that they are with this red color, the ones that they have the high volatility impact in the currency, but also considering these the ones with the orange colors. So for people that they are intraday traders and they want they are actually trading in a 15 minutes charts, 13 minutes chart, etc. They might, because you might possibly want more opportunities to trade in the markets, you might consider checking also and monitoring also those events as well, the ones with orange, because with this way you have more opportunities in your trading routine. Okay, so by checking also the medium impact events, you have more opportunities you might identify more opportunity to enter the market and trade the market, trade the events, the news events, and etc. So sorry. Okay, so how you were supposed to do that, we'll see it in a minute. So first of all, let's these are the before we see how you could trade all these intraday or not, or in long term, let's see the economic data and events based on priority. So the okay, just quickly. So the most sensitive releases that affect currency rates and are the most traded ones are, first of all, the interest rates and monetary policy statement, the interest rate decisions and monetary policy statements. These are the ones that they are the most sensitive releases, and they have a direct effect in the currency rates, and they are the most tradable ones. So generally, central bank rate decision cause the most volatility in currency pairs, and especially when we see interest rate hikes or interest rate cuts, unexpected ones. So this is the first event in priority that actually caused the most volatility in the currency pair. Second, it comes the gross domestic product data, which reflects to the country's gross domestic product. It's one of the most important measure of the economic health. So you can understand that if that number comes better than expected, then we have a positive development in the economic growth of that particular country. So that's positive for its currency. If that comes below expectations, then we have a slowdown in the economic growth. That's bad for the currency. So the currency is likely to go down, and etc. Third, inflation data, CPI, Consumer Price Index, inflation releasement. The level of the price of, this is the level of the price of goods in a nation, and whether prices are increasing or staying in a range. So that can be significantly, that could affect significantly central bank's decision. Okay, this number could actually affect central bank decision. So automatically, when we see the outcome of the inflation number, we are starting immediately to make assumptions on the potential step, the potential decision of a central bank. Okay. Fourth, jobs news. I was saying about NFP earlier. So unemployment rates and the amount of people receiving benefits for unemployment, these are actually provide a barometer for the nation's economic health. So we take, for example, the NFP that is on Friday. So the US non-farm payrolls data, as I said, is the one that is most closely watched economic indicator of this type and can have a substantial market impact. Okay, so a miss of the data of the NFP could have a negative impact on dollar. On the flip side, a bit of that number could have a very, very positive impact on the dollar. Okay, so okay, that's it for jobs news. Sorry. Fifth, parliament votes. This is often for the UK, so sometimes we see how many policymakers voted against a decision or agreed in a decision or remain. So parliament votes are actually sometimes significant because they actually show whether the parliament is splitted or not. Sixth, retail sales. And trade balance, actually. I forgot to state the trade balance. So trade balance is another important economic event because it give us the difference, the variation between the imports and the exports in a country. So again, this has a substantial impact on a currency. So other than that, from the political perspective, we have the national elections. Again, a country's political climate has an important effect on the currency's country. Okay, especially if we have some economic changes that will take place when a party gets elected. Also, referendum votes. Take, for example, what's going on with Brexit the last 2 years. So any public votes in general from the largest economy in the world have they are quite important for the national matters. So so they could have again a significant effect. They could significantly affect the value of that country's currency. As the most recent example is Brexit, and the discount of more than 10% of its value, of the pound value, since the Brexit vote. So these were the most important economic data and events that you should take care of based on ranked per priority. Okay, you should be aware that each country has around 5 to 8 of the above data each month. And you can, as I said, you can check the calendar you have, and you can see in advance the data for up to a month in advance. Okay. So let's move on up. Over here in this chart, I have I'm presenting you an up-to-date dollar yen uh, up here we are. Actually, this is the correct slide. So as I was saying, okay, here I'm presenting you an up-to-date dollar yen 1 hour chart. Because I want to show you how the data affect the price action and how significant they could affect the price action. So yesterday, actually, a good example was yesterday's releasement of ISM manufacturing in the United States. So the ISM manufacturing number came out actually less than expected, and actually we have seen the lowest reading since 2009, exactly just after the 2008, the Great Recession. So this, if I'm not wrong, let me check the calendar just quickly. Yeah, so the ISM manufacturing index yesterday came out at 47.8. So that's below, well below the neutral zone, the 50 zone. And this is the second straight month presenting that the manufacturing sector in the United States presenting a contraction. So this actually rekindled the recession worries. So the traders started to worry that that the manufacturing sector in the United States is slowing down. So that's why we have this big bearish candle and during the announcement. Okay, so we have seen an example was the dollar yen, but I'm sure if you check all the dollar currencies, major currencies, you see similar reaction. So similar reaction, the negative impact on the US dollar. So we have seen exactly after the US manufacturing ISM number, we have seen dollar getting weaker and weaker, and from the flip side, we have seen yen getting stronger at the same time, because of course the yen has picking up some safe haven demands, as you can see over here, because simply when people are like afraid that the world's biggest economy, such as is the US, that I'm telling about, is pointing to a possible recession risk, then the market participants are turning to a safe haven currency. So that's why we have seen dollar weak due to the recession fears after following the big mist in the manufacturing index, and the yen getting some a pickup. So dollar yen drifted lower, break and drifted lower in this hourly chart during the announcement, and actually moved from 108.45 highs down to 107 let's say 0.84. That's nearly 60, if I'm not wrong, yeah, 60 pips lower. Okay, just on the 1 hour session that we had the releasement, the data releasement. So, and in general, any signs in any country's economy, in any economy that is like signaling or signaling a recession, is actually bad for the currency, for the country's currencies. So in this situation, we had the U.S., which with the sign of a possible recession in the manufacturing sector, at least, and that actually had a negative impact in dollar and a positive impact on yen, since we have seen safe haven demand for yen, of course. So when during such significant data releasement, a good price action strategy that can be used is by observing any breakouts. Okay, so the breakout actually warrants a price action strategy to be used. So in this situation, in this chart, you can see that I have applied Bollinger Bar candles, Bollinger Bar patterns. Sorry. So after on the releasement of the news, I have spotted the breakout of outside of the Bollinger Bands, okay, which was followed with another hourly candle negative to the downside. So this actually gives me the direction to the downside intraday, at least for dollar yen, followed by this big mist in the ISM manufacturing PMI. So a good way to read what's going on and to and to actually trade the news is, first of all, to wait for the data to be released and to wait a bit to see the next candle in order to have a confirmation for the for the for the market, for the overall market sentiment of the overall market sentiment. So you can use Bollinger Bands or moving averages to identify a potential breakout of the price above or below those levels, then wait for the confirmation that the second candle, the next second session, depending on your time frame, that could give you a confirmation for the direction, and then follow the direction of the trend. So once the data release, once the candle, the candle has closed and you have another confirmation with the next consecutive candle pointing in the same direction, then you follow the direction of the trend. So you see, this is a clear breakout. So that the data were out at around 3:30 GMT, if I'm not wrong. So that our candle closed at 4 o'clock outside the Bollinger Band, a very, very big bearish candle, breaking the 20 period moving average, the 50 period moving average, and closing below the Bollinger Band. Then second candle give us a confirmation for the downwards trajectory of the pair. So a good way to treat the news is wait for the data to be released, wait for the confirmation based on your technical indicators, and then entering the market following the direction of the trend. Sorry. So typically after the releasement of a very, very high impact event, the ISM manufacturing index yesterday, or if we have a central bank interest rate decision and statement, etc., the markets, if you check the charts, traditionally or typically markets need around 15 to 30 minutes to assimilate the news. That's why we're actually we have a lot of swing traders closing or opening their positions 30 minutes after the event, or they are closing or opening their positions 30 minutes before an event and re-entering the market 30 minutes after the event, if of course the trend is still relevant, is still valid. So you could close a position prior the releasement of prior the event, just to avoid any major losses that could take you out of the market due to the extreme volatility at the time of at that particular time of the releasement, and to re-enter the market just 15 to 30 minutes after the releasements. So the volatility is like it has smoothened a bit, so the currency won't be so volatile and like make extreme movements. Okay, so be careful. It is very, very, very risky to enter exactly prior the news, or even 5 minutes prior the news, as this is a period of very, very high volatility in the market, because the market are still examining the meaning of the manner of the markets, the meaning of the consensus, and etc. So you could either enter or close in position well before the releasement, 30 minutes, an hour before, etc., or wait to open a position once the market is calmer, it has assimilated the news, is not so volatile, you have a clear direction, then so 30 minutes or even an hour after the releasement. Okay, like the example that I showed you just before. Try to trade the expectations or reactions to the event. So if you want to trade before the event, like from the event, let's say, is at 3 o'clock in the afternoon, and you want to trade on the expectation of the event, so open your position earlier in the morning and close it an hour before the releasement. Okay, don't trade on the time of the releasement. If you don't want to trade on the expectation, the anticipation of the event, then trade on the reaction of the event. So wait for the data to be released and enter the market 30 minutes or an hour after the event. Once actually you have a clear direction, a clear signs of the direction of the potential direction of the currency pair. Follow the trend. The trend is your friend, as Stuart is saying again and again to you. Okay, follow the trend, follow the candles, what the candles are telling you. Always wait for confirmation. As I said, a very good technical indicator is the Bollinger Band patterns or moving average. You might consider use those ones. Okay. The first in example of the first releasement in priority one, and the ones that in one they had the highest impact is the central banks that I mentioned before. Interest rate announcement and statement can have one impact. So usually after the interest rate announcement, usually just a few hours later or an hour later, I don't remember, we have also a press conference as well. So don't ignore the press conference. Sometimes the press conferences are more important than the actual interest rate announcement. Okay, press conferences are around 30 to 45 minutes after the interest rate decision, but they are very, very important because the statements that the policymakers might make during the press conference or the leaders might make during the press conference sometimes compound with the announcement, but sometimes are coming in contrast with markets interruption of the announcement. Okay, a good example and a recent example of this contradiction is the Fed press conference back in July meeting. Okay, so indeed, before the press conference back in July, back in the, I think it was 31st of July, back then, indeed, the Fed cut rates by 25 points. That was very, very well expected from the markets, was fully anticipated by the markets. Okay, but during the press conference, we haven't, the chairman of the Fed, Mr. Powell, didn't actually deliver the dovish policy path that the markets had been priced in. Okay, so the Powell was actually he actually disappointed a bit the markets, because he made some comments on sorry, uh, he made the comments that this is a mid-circle action and not the beginning of a lengthy cutting circle. So it's like it's saying that this might was just a single cut that that we don't expect to follow. We don't expect to have more for the rest of the 2019. So he like eliminated the length. He like it wasn't as dovish as we were expecting. It didn't actually provided how can I say a statement that could help the market forecasting another rate cut in the next monetary meeting. Um, so that was a press conference that it was that came in contradiction of the market interruption of the announcement, because it came less dovish than expected. So okay, of course he didn't actually state that it's just one rate cut, but he actually insisted that it's not the beginning of a long series of rate cuts. So that was taken that actually caused a lot of volatility during the press conference. So actually, if you go back and check on the 31st of July, you will see that despite the rate cut, a rate cut usually has makes the current currency cheaper. So it actually has a negative impact on the currency. But that particular day, you see that actually we had a positive impact on the dollar. This has to do on the fact that the markets were anticipating. The press conference came in contradiction with what markets were expecting. Wall Street back then closed with losses of over 1%, and that was, of course, on the less than aggressive easing tone from the Fed, from Mr. Powell. And of course, in the global outlook, we'll still have the worries regarding the trade talks development, the Brexit, and etc. So let's move on. Okay, yeah, this was the time of the releasement. Actually, so this was the time of the conference. So we have seen dollar index jumping higher, breaking above the Bollinger Bar and closing above the Bollinger Bar, and continuing the same direction the next 3 hourly sessions. Okay, so let's move on. And that's the last. Okay, we have reached to nearly to the end of our session. So now is the time. I will go through some things that you need to take care of. But until I do that, I would like if you have any questions, just stick them in the box. Now is the time to do that before we end the session, before we finish our webinar. Okay, so let's summarize what we have said so far today. So, okay, as I was saying, you need always to check your calendar and to check also the releasement, whether they are what they actually mean. Is that good for the currency, for the economy, bad for the economy? In order to understand in order to find the reason for the for the overall market sentiment, that particular day, week, month, or even quarter. Okay, but you need to also take care of something. As I mentioned, markets sometimes don't always react logically. Okay, unfortunately, sometimes markets are irrational. Irrational. So don't try always to find the reason behind um, every single price movement. Okay, of course you need to be very well prepared. You need to know what's going on. You need to study. You need to learn what each of these news announcement is, why and how it could impact the economy and potentially the country's currencies or its economies, its commodities, etc. But sometimes markets don't really react logically. So don't focus on identify the reasons. Sometimes it won't be easy to identify it, or sometimes you might don't find why, let's say, that particular hour, let's say dollar yen moved on the opposite direction of what the data were telling me. So don't try to find don't like to figure out what happened. The reason eventually will come out eventually, or maybe not. Maybe you will never know why um, you have seen that that like weird reaction news that logically should be positive for a currency, but that's not always the case. Sometimes we have the opposite effect. So don't try to figure out the reason. Okay, uh, if actually you don't understand, or you have an opposite effect of what the news supposed to have, then based just rely on the technical of the asset. Okay, if you can identify and figure out the reason why you have seen an opposite effect on a currency pair or in a commodity, opposite of what the news of the outcomes of the data releasement or the outcome of the news, then don't try to find out the reason, don't try to figure out the reason, but rely on the technicals. That's why we must always use also we must also apply in our trading technical analysis, not only solely fundamental, because sometimes it's better to trade on what you see and not what you think. This is something that Stuart is repeating in this webinar. Sometimes focus on reading the price action, on reading what you actually see in the chart. Okay, what the chart is telling you. Okay, so a good example why sometimes it's good to focus on what you actually see and what the trend is telling you, what the candlestick is telling you, is this example back in when was that? I think it was 12th of September. So that day we had the monetary policy statement from ECB, but we also had at the same time of the press conference, we also had the inflation data from the United States. So you can see that during the once the ECB actually announced that it will keep the rates on hold. Okay, actually no, back then, sorry guys, we had, I think, yes, it kept the interest rate on the interest rate on hold, but ECB actually announced that that cuts the deposit rate and is about to restart the quantitative easing. So, but at the same time, so on the announcement of the following the as expected ECB rate cut of about 10 points of the ECB, you can see that the euro dollar actually rallied initially rallied up to here, up to 110.67 from the just 40 pips higher from its pre-ECB levels. So it rallied higher, but then it rallied higher once the ECB announced the well expected 10 points rate cut, but immediately it came down sharply lower down to 109 area once the ECB actually, once the market actually realized the restart of the quantitative easing by November. So that turned the euro dollar lower. That added pressure on the euro, on the announcement. So despite the well-expected cut rate, the press conference, the announcement of the quantitative easing starting on November actually added pressure on the euro. At the same time of the conference, we also had the inflation out of the United States. Okay, so even though the quantitative easing announcement weighted on the euro and pushed euro further to the downside, at the same time we had the inflation data out of United States. So the dollar actually once the core inflation outcome came warmer than expected. Okay, and we at the same time we also had, as you can see my screenshot, the unemployment claims which came lower than expected as well. Then that weighted on the dollar. Okay, that was negative for the dollar. That's why we have seen euro dollar currency rallying from these session lows back higher again and up to the 107 area. Okay, so a very contradictory picture within 1, 2, 3, 4, 5 hours time. So from the ECB announcement until the press conference, inflation from US announcement, core inflation, and the big unemployment claim number from the United States. Okay, another example that you need to take care of the both sides of the pair. The both economies in this situation was Eurozone, ECB on the one hand, and the US economy. So the other hand was inflation from the United States and unemployment claims from the United States. Another example is again on the NFP day. There's traditionally during the NFP releasement, we also have some Canadian data at the same time. So dollar CAD usually differs from the other dollar currency majors that particular times because we have the release them of the Canadian data as well. So Canadian dollar is like affected by the Canadian data rather than the NFP ones. So I cannot see any questions. Okay, Humar, I think you have already left, but you can the social. I don't know what you mean. If someone can trade the market based on info obtained on social media, if you're referring to someone like randomly in social media to like say to you that I don't, you know what, NFP will come at 200K or I don't know. No, that's a no. you need to base your your trading on a serious learning, reading, and not just randomly on what any person is in the social media is like pointing out. Like, I don't know. You need to if you're reading some serious analysis from economist or market analyst, and etc. Yeah, that will help you understand the market. It will not give you though it will not, no one will tell you how to trade, okay? But reading some serious articles and reading some serious analysis from economists and market analysts could help you actually understand the market, understand the economic data, understand what happened, okay, and what's going on in general in the market. Often you're asking, what is a trading plan and how can I build one? We already went through that in the beginning of our session. However, we have some recordings in our YouTube channel solely on how you can build your trading plan, your own trading journal step by step. So yeah, it will be good if you watch those recordings. They will help you definitely. Okay, so before I say, so the last sum up. Actually, we already covered that. We said that in the cases that the data releases may be followed by other significant data, either by other countries or by conferences or any critical statements from leaders or policymakers, this could actually turn the price action in the opposite direction. So take care of conflicting data news, especially if you're trading major currencies such as euro, dollar, the example that I just show you, dollar CAD, another example that I just show you, and etc. So yeah, take care and try by taking care the conflicting data prior you are prior entering the market. It will help you to reduce the efficiency of the news trade significantly. Okay, so don't forget that risk management is also a significant part of trading. Of trading in general, and especially when you're trading the news. Trading since the trading in the news is something that requires preparation, a very good preparation. It requires a good risk management as well. Okay, with this way you will actually minimize your losses if the market comes against you. Okay, so that was the end of our webinar on how to trade the news, the economic news. I see that you don't have any other questions, so I will finish the webinar by showing you the forthcoming our forthcoming webinars for the October. So give me a minute to stick that in the English. Sorry. Okay, so tomorrow we have money management strategy with Otto, live analysis every Tuesday. Another very significant and interesting strategy, especially for people that are intraday traders, is the crossing of exponential moving average strategy. From Stuart on the 9th of October. How to use a trailing stop, trading with the average through range on the 16th of October. Indicator basics, pivot points, as well, how to trade intraday with pivot points, a very technical webinar based on some oscillators such as parabolic stop and reverse and average directional index ADX and parabolic SAR as we are we're calling them in short terms, and momentum reversal strategy and scalping strategies at our last two webinars for October. 30th and 31st of October. So that's our calendar for the month ahead. And I have to call the end of our session. Thank you for attending our webinar. For any questions, just email at webinars@hotforex.com or in our social media website. You can message us in your Hot Forex Cowell or Hot Forex Facebook page and etc. Instagram page as well, Twitter, link, or even LinkedIn. So thank you for watching. Hope you're having a great trading day ahead. Take care. We have ADP number today. Just missed. Oh, yeah, I lost the track. So, okay, this is out of our way for now. So you might consider entering the market once the market are quite calmer, since the ADP number is already out and missed significantly. No, small miss, as Stuart is saying just to me right now. 35,000 jobs from last month. Okay. Okay, that's not too bad. So, thank you for watching and see you again next week. Okay, bye-bye.